All right, well, we're going to go ahead and get started this morning. We are grateful that everybody joined us in the new year for our very first session in January. So again, good morning, Happy New Year. Way to kind of start it off. So I just kind of want to do a couple housekeeping items, and then I'm going to turn it over to Lori to talk to us about, working together, auditors and treasurers. So first things is in December when we held these sessions, we did do some recordings. We recorded all of them. They are now available on our website. So in the same place that you go to get the packets for January, there is a section for December. If you click on that, it should accordion down a menu. You will see the packets, and then the recording should be next to each of their associated packet. So you can watch those at any time that you'd like, or if you have staff that you would like to see them. We will do the same. We are currently recording this one. I will try to get these up at the end of the week. Sometimes it's not just me that does this, so I will try. No promises, but I will also let you know when they are up and available. At the end of today, we are going to do another Q&A, so we'll open up your cameras and your mics, give you back control of those so that you can maybe introduce yourself, ask any questions that you have, things like that, just kind of maybe even a get-to-know-you thing with us. I do have a couple friendly reminders. One is now you guys have taken office. It's January 4th. If you have not emailed us with your work email and we are still using your private email, please send us an email with your work email if that's the one that you prefer for us to use. I know that I do have some who are getting both. It's just because I want to make sure that you get the sessions, but the next round of emails will, if you have given me a work email, it will only go to the work email. But those who have not, I only have your personal, okay? So please just send us an email at counties, COUNTIES, at sboa.in.gov. I will put that in the chat box here shortly. I also want to give one more friendly reminder. We're hoping that everyone has gotten bonded. If you haven't gotten bonded, please, if we can be of assistance, reach out to Lori and I. We'll at least lead you in the right direction of who you need to be in contact with at your county. But we need to make sure that everybody gets their bond done, okay? With all of that, I'm going to turn it over to Lori to start talking about working together with the auditors and the treasurers. Lori?
Thank you. Oh, I can share now. Sure, I do this right. Is that working?
Flip it.
Flip it.
You got your notes showing. So go to display settings.
Display settings. What?
And switch it. Or swap it.
Is that better?
Perfect. You're good to go. You got a big box in the middle of your, there you go.
It was telling me that I just swapped it, I think. Well, good morning. I'm glad all of you were able to carve some time out to do this. And as Ricky said, we've recorded it, so you'll have the opportunity. You can listen to it again if you missed something. Wasn't in 2020, I'll tell you that. 2019, we did quadrant meetings where we kind of went out instead of doing one large group together for an annual meeting for the auditors. And one of the sessions that we did during those quadrant meetings was to pull the treasurers and auditors in to discuss things together because we really think it's very important. Your offices have to work together, which is really the point of this email, is to discuss many of the ways. This isn't going to give you everything you need to know, but what it's going to try to do is give you an understanding of how you are dependent on each other to keep county business going. And so we wanted to go into some detail on that. We did discuss this a little bit when we were doing your roles and talking about what the auditor and treasurer do. So this is the more detail. So your offices are unique in local government. The state does have an auditor and treasurer, but most other offices other than the counties have one fiscal officer. A town or a city has one clerk treasurer who does both the books and has custody of the funds. But for the counties, the segregation of duties between the auditor and the treasurer are built into how these offices are established. And it's very, very important then that both offices work together in order to get the job done, because it takes both sides to make it work. We've had some issues, which I hope none of you have to deal, but we've had some, Ricky and I have dealt with some issues in the past couple of years where the auditor and the treasurer don't get along very well. So do you have to like each other? No, you don't. There's no law that says you do, but you got to get along. So you need to, in a professional way, work out controls and procedures between your offices to make that everything gets done and that you're properly serving the citizens of your county. They're the ones that elected you to office. They're the ones that expect that you will get this work done. So when we come to the segregation of duties, and that means that there is, segregation of duties is one of the most important rules of or aspects of internal controls. When you do your internal control training, they'll talk a little bit more about that in the video, or if you read the manual. And I'm assuming that we'll be doing a lot more training on internal controls for you as well. But what that means is that you don't have one person that is able to do everything, from initiating the claim to getting it approved within the system, affixing a signature to it, printing that check, and taking control of all of that. And so that is separated between the two offices. So not only does not one person, but one office cannot do that. What we found is that the main cause of the breakdown between the offices is that at some point in the past, it's possible that a newly elected, which you might be running into, came in and was not as strong or didn't understand all the things they needed to do, and the other office kind of stepped in to overcompensate for that. Eventually enough time passes, and then we hear, well, this is the way we've always done it, instead of realizing that, no, you took measures you probably shouldn't have in the beginning to make it work, and you never let go of those. So if you get into your particular office and you find there are things that you think your office should be doing that the other office is, be sure and let us know, and we'll help you work through those. The other comes from the use of the software. When everything was under a manual environment, there were manual procedures that were followed. As software came in to make things more efficient, there's nothing wrong with software. All of you are using software. But in creating some of those efficiencies, it may have eroded some of the internal controls that was built into the manual system. I do want to point out that we fully understand that this is not the most efficient way of doing business, having to work between the two offices. When we talk about refeeding, which we will, and we talk about claims, it isn't the most efficient way, but it does provide key controls that help prevent errors, misappropriation, and safeguard the county assets. So it's a very important internal control.
Hey, Lori.
Yes.
Your slides are not advancing on my screen.
I haven't advanced them yet.
Oh, okay.
I'm still on slide 1. I talk a lot. Sorry about that.
Well, no, I got it. It's fine. You're good. Go.
Sorry. We're now on slide 2. Is it showing slide 2?
Yes.
Okay. This is what I talked about a little earlier, segregation of duties. And so the fundamental premise of the segregation of duties is that an individual or small group of individuals should not be in a position to initiate, approve, undertake, and review the same action. Separating that ability to record, authorize, and approve the transactions along with the handling of the related asset reduces the risk of error or fraudulent actions. And this is taken directly from our internal control manual, which is available on our website. I suggest it's not a really long manual. I suggest that you at least look through it and familiarize yourself with that. What segregation of duties protects both your government from fraud and theft. It also protects your employees, because properly designed and implemented controls that show that the fraud and theft has not occurred. And it also detects the errors before they become larger errors or, 6 or 7 months has passed and it's hard to understand where the posting error occurred. So these are very important things. We are going to discuss the segregation of duties that relates to receipts and disbursements, and in the interest of full disclosure, we are going to, in the discussion of proper receiving disbursements, which is kind of a going back to the basics, we need to let you know going into this that when we did this with the elected officials, with the treasurers and auditors in 2019, actually started probably in 2018 and 2019, we got a lot of pushback. Because, like I said, a lot of things had already been established, or this is the way we've always done it. What we were thinking is going back to the basics was actually a change for everybody. And so you will probably find in your offices you were in various stages of implementing this, and we get that. But if you have any questions about it, or if it's not exactly going the way you understand it, be sure to reach out to us on that. Okay, so as I said, the segregation of duties between the auditor and treasurer is actually found in statute. It's in the way the offices are set up. Our audit position is that you do have to comply with this statute or with the segregation of duties. Where statute prescribes a specific authority to an office, that can't be delegated to the other office. So if the treasurer is supposed to do something, then the treasurer needs to be doing it. If the auditor is supposed to do a specific duty, then the auditor needs to do so. It is possible to establish compensating controls if a true segregation of duties is not possible. For example, if you have a small office, there's like you and one deputy, there are compensating controls that can be done within your office. And I will probably tell you to get tired of hearing it. Ricky and I love internal controls. We love talking about them. So if you have questions, call us up. We will brainstorm on the different ways you can address or set up compensating controls in those situations. But do remember two things. We can't write your internal controls for you. Those are controls that you must establish for your office. We can only offer ideas or help explain the need for those controls. And the second is we don't really do well with yes, but. So if you're calling to tell us that it simply can't be done, you're probably not going to get really far. We kind of need you to have an open mind when you call and want to really know what can be done. So make sure, again, keep that in mind, and we will be more than happy to discuss and brainstorm with you. We will be having, I'm sure, future training on internal controls as well. So here is a basic overview of the accounting process, and this is broken out into steps that should be segregated or segregated between the auditor and treasurer's office. So authorizing is the initiating transaction. When we focus on receiving and disbursements, we are talking about the initial collection into the treasury or receipts, and the claims process when we're disbursing. Custody of the cash and investments of the county from which the receiving and disbursing take place. The record keeping is how we take the receipts, disbursement, and track the receipts, disbursements, and fund balances on the funds ledger. And these are the financial records of the county. Reconciliation is the process of comparing the county's financial records with the cash and investment balances from your banks, financial institutions to support those financial records. So what duties belong to the auditor's office? Initiating and approving the transactions of receiving and disbursing from county funds come from the auditor. Okay, now I'm not talking about property tax here. So for property taxes, the treasurer collects all property taxes and maintains that on the cash book. We'll be talking about what that treasures with separately. So we're not talking about property taxes, but other receipting from all of your departments, from payments that are made that go directly into the county, is what I'm talking about as far as the auditor does the receiving and dispersing from the county funds. Okay. And as a note, at settlement is actually when you take the property taxes and receipt them in, so the auditor is involved in that, and then you disperse them by distributing them to the appropriate taxing units. In addition to receiving and dispersing, the authorization for receiving and disbursing, the auditor records those transactions in the official records of the county, the funds ledger. The auditor's funds ledger is the official financial record for the county. It's the basis for the annual financial report that is uploaded or placed on Gateway each year. And it is that financial report, that annual financial report, or AFR, is what we audit when we come into audit. So here's a statute for the auditor, and it says, again, assigns this duty. The auditor shall keep an accurate account current with the county treasurer. The auditor shall post the record and issue the quietus. So for receipting, this statute provides that the auditor keeps an accurate account or record keeping, reconciles with the county treasurer, and issues the quietus for the receipt. The quietus is the term for receipting, is the official document that a receipt has been posted to the funds ledger. The receipting process starts with the auditor. The quietus is the basis for posting the receipt to the appropriate fund. At the same time, the treasurer will be taking custody of the funds, and the two offices must agree, which means what is posted to the funds ledger must be accounted for in the treasury, what has been deposited to the treasury by the treasurer. So those must agree. On the disbursing side, the auditor shall review all claims filed against the county funds and issue the warrant for payment. A warrant is not a check. We often hear those done interchangeably. That's not a problem until you're reading the statute, where you need to keep in mind the warrant is an order to pay, and that warrant is provided to the treasurer, who will then make the payment, whether by check, electronic payment, or some other form, usually electronic or check. The terms warrant and check, although used interchangeably, are not completely the same, especially when you're reading the statute. You need to keep in mind what it means when it states that the auditor shall issue warrants. It's not saying the auditor shall issue checks. In that particular statement, it's saying the auditor is issuing a statement to the treasurer to make a payment. Okay. So the auditor has audited the claim, determined that it's a valid claim against the county, and that the payment is due in the specified amount. That warrant is an order then to the treasurer to pay out this claim as it has been determined valid. The treasurer then issues the check, or the ACH, or another electronic payment, wire transfer. The county checks, the checks themselves have two signatures, one from the auditor, one from the treasurer, to show that both have completed their duties regarding claims against the county. So what does the treasurer have? The treasurer then is the custodian of the county treasury. This means that the treasurer is the gatekeeper for the treasury. No money enters in or leaves the treasury except under the authorization of the treasurer. We'll talk about electronic deposits, and it is possible that departments may make deposits into a county bank account under the control of the treasurer. But the treasurer is still responsible for posting those receipts to the cash book and providing documentation to the auditor of these deposits. The treasurer is also the investment officer for the county. The Treasurer of State's office is going to present to you tomorrow about investments, and you will be working with your Board of Finance, which is your commissioners. You're on the Board of Finance if you're a treasurer. The treasurer has the responsibility to reconcile the cash book to the bank and investment statements. Reconcile means to make the two records agree. The bank and investment statement are the financial institution's financial records, not yours. What the bank gives you is a copy of what they're saying is their records of what you've deposited and what you've removed from that bank account. But it's their records, it's not yours. We will be having a session on reconciling later this month for treasurers, actually for all the offices, but definitely for treasurers. So the cash book carries a summary, a total of the funds ledger, which is what the auditor maintains, as well as the property tax, excise tax, and other taxes that have been collected but not yet put onto the funds ledger, not yet settled. The funds ledger, again, is the basis for the annual financial report, but that annual financial report must reconcile to the bank. So when we come into audit, we have to verify that the funds ledger does reconcile to the bank and investment. And it's a combination of the reconciliation between the two offices, auditor and treasurer, and between the treasurer's cash book and the bank that support that financial support, that financial report. And that's a very, very key thing. so here is a statute on the treasurer as the custodian of the money held by the county. Receipts are not part of the county treasury until the treasurer has taken custody of those collections and issued a receipt for the collections. Payments out of the treasury must be approved by the treasurer before they can be made. So this has been an issue in some of the counties, especially with departmental collections, where they might bring all of their reported collections and their money into the auditor and leave it there. And that is not how it should be done. We'll be talking about this when we talk about receipting, but the report of collection goes to the auditor because they initiate the receipting process. But collection or receipt of that money custody of that money does not transfer to the county until the treasurer accepts that money, counts it, and puts it in for deposit, and then issues a receipt saying, yes, I have accepted this money. So until that point, it's not in the county treasury. So it's very important that we keep that distinction. And here's another statute on disbursement for treasurers. If there is sufficient money in the county treasury for the payments of warrants of the county auditor, and again, those warrants are the statements from the county saying these claims need to be paid, the treasurer shall pay each warrant when it is presented. So we already discussed that the auditor audits and determines the validity of the claims against the county. So the treasurer does not have responsibility to audit those claims once presented by the auditor and after, again, approval by the governing boards. However, the treasurer does have the responsibility to determine that there is sufficient money in the county treasury to pay those claims, and that does include specific banks. So if you are paying payroll claims out of the payroll bank account, there has to be sufficient money in the payroll bank account to cover all of the payroll claims that have been presented to you, and it's your job to make sure that that is true. No one should be guessing. If there's enough funds to cover the payroll bank, in the payroll bank to cover payroll, you should know that. So the treasurer is to make the determination before those payroll checks are issued or any direct deposits are made. That's probably the most problematic, which is I'd say payroll, but it's the same for the main account or checking account for the county. The same way, if money is coming out of that specific bank account, you have to determine there is sufficient money in that account to cover all of those checks. And remember back to our segregation of duties, it should not be possible for one person to approve a claim, create the check, affix the signatures, print the check, and deliver the check. So the auditor can audit the claim, get it approved by the governing board, even initiate the check, but your signature should not go onto that check until you've done your due diligence to determine that there is sufficient money to cover those claims within your bank account, then you affix your signature to those checks. So you need to have procedures in place, even within your software, that waits for your authority to pay those checks before those checks can be sent out. So again, it doesn't mean that the checks can't be generated by the software or the signatures can't be affixed by the software, but control over the signatures must be maintained. Just like if you were using a signature stamp, there must be controls in place to prevent someone in the auditor's office from writing, signing, and issuing checks without the treasurer, just as there must be controls in place to prevent someone in the treasurer's office from writing and issuing a check that does not have a claim already approved by the auditor. Those two things have to be kept separate so that all those checks require both offices in order to be issued. Okay, so we're going to go over some of the steps that cause some of the controversy. And like I said, when you get into your you guys are already in your office, but you get into receipting and you get into disbursing, you may hear about this. Again, it did cause almost every, not only auditors and treasurers, but recorders and clerks and everyone, all the departments that have to do this. So again, we're trying to get this corrected and reestablish the segregation of duties. So the most common receipt, or again, not talking about property taxes, the most common receipt you get is probably from departmental collection. So your health department collects money, your parks department, possibly your building department, places like that. And they're going to collect that money and turn that over to the county to be put in the treasury. Okay. The prescribed form of this process is called the application to pay. So you may hear that term. That was the prescribed form. This form was designed back in, I think, 40s. Most counties obviously have software now, so they're not using that form or that name. We don't care about the name as much as we care about the process. And that's what you need to be paying attention to. So the person making the payment, so the person from the department making the payment to county, would provide a report of collections. That's telling the auditor, this is what I've collected and this is where it needs to go, whether it's a general fund or a perpetuation fund of some sort or another fund on the county's funds ledger. The county auditor reviews that, audits that report of collection, makes sure that those revenue lines are accurate, and that report of collections looks good, and they will start the quietus process. This then brings the treasurer in, who gets a copy of the initial quietus or the pending quietus, and they are going to take physical custody of the money. So they're going to count the collections, whether it's a check, cash, change, whatever it is, with the person making the deposit to the county, and agree that this is what's there. So if the report of collection says that it's $500, the treasurer is going to count and say, yes, this is $500. Here's your receipt. I've taken this for deposit. Okay. If it does not, then you're going to deal with it at the time. Okay, so again, until you've accepted it as the treasurer for deposit, even though they've already been to the auditor's office and got the quietus started, until the treasurer's accepted for deposit, that money has not changed custody to the county treasury. It's still the responsibility of the department that collected it. Okay. Once you've given the treasurer's receipt, whether this is done electronically or physically, they then take that receipt back to the auditor. The auditor is then going to finish the quietus process. So you're going to see, yes, they've given the money to the treasurer's accepted this money, and you're going to finish, which means posting that quietus to the records, giving a copy of that receipt to the person from the department that's making that deposit. So when it all is said and done, you have a copy of the quietus, the treasurer has a copy of the quietus, and the departmental person has a copy of the quietus and their treasurer's receipt to show they've transferred custody and how that money is being posted. Okay. Again, it isn't the most efficient process, but it does retain that segregation of duties. Another problem that you will run into from either auditor or treasurer are the ACH or electronic deposits. Your distributions from the state are done electronically. And again, you need coordination between the auditor and treasurer's office to make this work. You should receive notification from the state when you're getting an electronic deposit so you know how to record it, but sometimes that doesn't happen. So the treasurer may be the first one to know that something's hit the bank. So they've got a deposit into their bank that you may not know where it belongs. So again, don't let those sit. If it's not obvious where it is, let us know. Rick or I know. You can also contact the local government email. We gave that to you last month, but call us and we'll give it to you again at the Auditor of State's office, and they can tell you, if this was a MBH distribution or, or a state grant or something else that's coming through the state, so that you can get the quietus process started, because it still has to be quietus in, so that it's added to the funds ledger, because it's on the cash book as you're going to post it to cash book as a deposit, even though you don't make the deposit. It's already in the bank. Okay. Sometimes the federal government will give direct payments of federal grants. It's not real common, but it does happen, and we do have a way that we can give you to contact them to find out what the payment is if it's coming from the U.S. Treasury as well. The issues that come up during audit are when these are not addressed. So if a deposit the treasurer is aware that money's been deposited to the bank, but there's been no quietus, and so it's just sitting there, whether it's posted in the cash book and it's a reconciling item, or it's nothing. It's in the bank and it's still it's just not on the financial records, because those receipts need to be posted timely. So if you get a deposit in January, it needs to be posted in January, not February, March, April, or May down the road. So it's possible for there to be a delay of a few days, like I said, if you don't know where it's coming from, to get this resolved, but don't let these hang on for a long period of time. Again, the auditor and treasurer need to work together and have procedures in place to let each other know when more researches need to be done or when quietus needed to get started to get these electronic payments posted. So for disbursing, which is the flip side of this, there are steps for disbursing from the county listed here. So the auditor gets the claim, and they audit the claim. So they're going to make sure that it is accurate, that there is a proper disbursement, that it is a proper disbursement for the county. Does the invoice mathematically correct? Is it signed by a department head to say that these goods or services received, to go through the whole process to make sure that this claim is valid. Once they determine that it's valid, then the auditor turns that over to the governing board. This is usually the commissioners that approve claims. However, if it's a redevelopment claim, that would go before the RDC, the health department, or drainage board sometimes approves their claims as well. But it's usually the commissioners approve the claim. So once they approve it, the auditor is going to prepare the warrant. In most cases with the software, the warrant is the check. The process should not proceed further until the treasurer has verified that the balance of the county bank account has sufficient funds to pay these checks. Once the treasurer has made that determination, the disbursement process can proceed for the checks to be printed, signed by both auditor and treasurer, and delivered. Now, again, electronic signature can be part of the software, but control over that signature needs to be retained by the auditor for their signature and the treasurer for their signature. The auditor would then post these disbursements to the funds ledger. For the electronic payments, the treasurer's office should have the authority to disperse those funds electronically, or both of you. It should not be one or the other. The auditor should not have the ability to authorize a wire transfer or electronic payment out of the county bank accounts. The treasurer has to be part of that, even just as they are with the check. So make sure your controls stay in place for the electronic payments. Payroll is also prepared by the auditor's office, and the auditor office creates the file for the direct deposit that the bank is going to use, but the treasurer still needs to make sure that the payroll bank account has sufficient funds. The direct deposit can go forward before that is sent to the bank for direct deposit, for the direct deposit of the payroll checks. So while the auditor is maintaining the official financial records of the county, the funds ledger that we talked about, that's the basis of the AFR, the treasurer is also charged with the duty to keep a separate accounting of receipts, disbursements, and fund balances for each fund. And I've got the statute here that gives you that. So based on the receiving and disbursing process, the treasurer would have information to post to their accounting of the funds. They've got copies of all the quietus. They've checked all of it and should have copies of all of the warrants that are issued, checks that are made out, electronic payments that are made. So they can post by fund, they can post what has been added to each fund. For example, the general fund, which is going to have the most activity, and what has been dispersed from each fund. Okay. Then the treasurer's copy of the funds ledger can be compared to the auditor's, which is the official record, and you can look for any variances. So if there is a variance, if the auditor's balance for the funds ledger or the receipts and disbursements for the month is different than the treasurer's, you need to figure out why. It's going to take some research to see what it was that got posted on one side that didn't get posted on the other side. So this is a separate check and balance on the funds ledger. Even though the funds ledger is the official records for the county, there can be posting errors on there. So again, you have both the auditor and the treasurer's records to look at to make sure you're catching this. So the total of the funds ledger is a subpart of the cash book. So there is a line on your cash book, treasurers, which shows what is the total of the funds ledger. Okay, and this is underneath the part that shows your property tax collections to date and your other taxes to date. This is the prescribed form for the comparison for the auditor and treasurer on their ledgers. Again, your software generates another report that provides the same comparison, and you can use that. This is what you would use if you had a manual form. So again, by reviewing, these are made up numbers, but it shows you how going through it lists each fund in order, and the balance in the fund, the receipts and the disbursements, and the ending balances. And if those are not the same, then you need to look and see why they are not the same. So maybe you missed, one side or the other missed posting a receipt or misposted a disbursement. You need to do this comparison at least monthly. Okay? You are required to do this at least monthly. Many counties do it each day because it's easier to see if there are any errors from one day's transaction than it is from the month, but you need to do it at least monthly. Again, it takes both offices. If you aren't both working on it, it's a little hard to do the comparison. So you both have to work, both sides have to work on this to make it work. And this comparison is required by statute. This isn't, this is a step that it needs to be done. And a lot of our audits, this is a common finding where the auditors and treasurers are not reconciling. So we're going to be doing a lot of training on this to make sure that this gets done. So what kinds of changes are we looking for? So example, as I said, each office should have a list of receipts or quietuses, and each should have the warrants. So those should be pretty straightforward. But there are other changes that you also need to communicate between the offices. We've already talked about electronic deposits that may not have been quietused in. So they're in the bank statement, but they're not on the financial records. There could be corrections. So if the auditor determines that an error was posted and something was posted to one fund and should have been posted to another, they may make a correction, which is an overall change. It's not an actual receipt in or disbursement out, but it's a correction of an error, which means the funds change. Those corrections need to be communicated to the treasurer's side. You might void a receipt or void a warrant or check for whatever reason, because it's not needed or it was done in error or it's incorrect. Again, those have to be communicated between the two offices so you know which ones have been voided, so that you, again, can make sure that you keep your funds in balance. If there is a transfer of funds, and this should not be common, but it does happen, that's also a change in the funds themselves. It's not a change in the overall total funds on hand, but a change in where money is between one fund to another. And again, this must be communicated between the two offices so you can keep that information in line. Again, hopefully when you are looking at your records this month, you will find that this has been kept up to date and you're able to do this. If you are not, be sure and let us know. Again, this can be a finding in your audit report, so it's very important that you are able to reconcile. So if you have issues from either side or from both, call Ricky and I, and we'll try to help you troubleshoot through this and try to get those corrected. Another area that you work together, and I'm not going to go over a lot on this, is property taxes and settlement. We've kind of touched on this. The Auditor of State will be providing more training on settlement of property and excise tax as a very basic or high-level understanding. The Treasurer has collected and posted these collections to the cash book and holds them on the cash book at settlement in June and in December. They're going to certify, the Treasurer is going to certify to the auditor the amount that they're holding. The auditor will then determine how to distribute those collections properly. They will be working with the Auditor of State on that. And those collections then will be moved by quietus from the place on the cash book where it's showing property taxes down to the funds ledger, because you're going to move them into the settlement funds at that point. So you're going to pull them off of where you've been storing them up to settlement point, posting down to the funds ledger. And then there'll be checks issued to distribute them to the appropriate places. You will also have sewer liens and special assessments that you're going to certify, that then checks will be issued to the appropriate utility or special unit that made the assessment. And again, we're not going to go over that today, but just be aware that's another area where you and the auditor have to work together to make the assessment or make settlement work. And actually, the property tax is one where you've got three offices working together, because the assessor is the one that starts the whole process with assessing the gross assessed value of property, which works into your property tax billing and collection. Okay. Excise tax is this is going to again require some additional training. I just wanted you to be aware of excise tax and how it's posted. This is also something that's done at settlement as far as getting the excise tax distributed out. So the treasurer is going to be keeping on the cash book their excise tax. The most common is the motor vehicle excise tax, which comes from BMV. There are some additional excise taxes that come from the state, like commercial vehicle excise tax, boat, aircraft excise tax. So as you receive those, the treasurer is going to post those to the cash book. There are reports that come from BMV that tell you how much money is being deposited in the account that the county has designated for BMV deposits. And so this is posted to the excise line on your other sources section of the cash book, and you're going to receipt it in just as you would any other collection that you receive to the cash book. The auditor is going to keep a separate ledger, which has a subsidiary ledger for each taxing district. So your center township or your city or whoever, based on reports that you get from BMV that tell you where this has been paid. So if $100 is collected, the treasurer is going to post the $100, but the auditor is going to keep track of where was that $100 paid, what taxing unit was it paid from, and keep a separate ledger for that for settlement. So at settlement, again, you're going to have to reconcile how much the treasurer has posted as the total excise received, and the auditor has kept track of it needs to be distributed. The really big thing to remember is that the treasurer is going to post it as the date that deposit is made, which is 14 days after the transaction date of when it is paid by the person paying the tax. So when you're doing your comparison, you need to make sure that you're using a report date or making sure that your dates actually line, or a report number, not a report date, a report number, because all of these will have a unique number for your county. Make sure that you're comparing the same time period, as I said, because if you're posting it, for example, if someone pays their excise tax on March 31st, the auditor is going to post that on March 31st in the subsidiary ledger for that township or city or town. The auditor is not going to receive that money until April 14th, and they're going to report it as a deposit on April 14th. So when you go to make your reconciliation, you need to make sure that that March 31st and that April 14th are what's lining up. And again, we'll be doing more excise or more training on this. I just wanted you to be aware of that. And I've got some exercises that we can do. There are some that we did in 2019 in fall that are still on our website if you want to look at it, that kind of show that comparison. I wouldn't worry about it in January because you got enough on your plate right now. I just wanted you to be aware so that when you're posting this, that you're keeping track on your receipts. What was the report number that you're receiving in? And for the auditor, that you're posting those transaction dates and report numbers as well. So as a county, you can make this work. Counties do make this work all the time. It does. We have had counties where it has gone horribly wrong, and most of this because of a failure to work together. So we just can't emphasize this enough. You need to find a way to make this work, showing each other a mutual respect, cooperation, and communication. Don't try to do each other's jobs, but make sure that you have guidelines and procedures in place so that all of these steps are getting done, that everybody's doing their own job, and they're getting the information back and forth that's needed to be done, but you're maintaining those segregation of duties, and you're still fulfilling those requirements. I think that's it. It is.
Okay, I am.
And we'll just stop sharing.
Back. All right, I'm going to make you guys all pants so you can control your camera and your microphone. It worked for everybody. So if you've got any questions, now is the time. If you just want to say hi or introduce yourself to us, if you haven't, yet, we just try not to talk over each other because it makes it really difficult to hear. See a familiar face, at least one. I think that's Tiffany. Her name disappeared when her face popped up.
I know.
It's a lot of information, to take in, being in office, if you've only been in office for 4 days. But hopefully it gives you a start on how the offices flow and work together. Does anybody have any kind of questions or just want to say hi? All right, Lori, she says, hi, sorry, I can't figure out the camera on the work computer. So definitely takes you a moment. We got somebody. That's Tammy. Hi, Tammy. I can see you. You can wave. Okay, so let me ask you this. Is everybody having a good first
2 days?
Couple days? 2 days?
I'm going to introduce myself. My name is Tammy Justice, and I'm with Rush County Auditor's Office. Rush County Auditor. First term, I've been in here as a payroll deputy, and so Jody Haar moved to Treasurer, and so we've been BFFs anyway since we were little kids. So we have a very good working relationship, and and another relationship too as well. So I think our county is going to be pretty good at communicating. So, but I'm looking forward to serving the next 4 years. My first day was a little bit kind of chaotic. I did have somebody resign, so
Oh, no.
so we're working on that. But it's all good. It's all good. We're going to have super fun here. So anyway, I'm glad to be here.
We're glad to have you. I'm glad to hear that you guys have a great relationship too. That's always great to hear.
It's a good attitude to have as well.
That's true.
Believe in yourself.
Makes working
you can
easier.
Do this.
Lori says that yes, I think she's had a good couple of days. She's been coming in since December to get familiar with the office and train.
Wow,
so that's
great.
always good too when you can get in a little bit earlier. Anybody else? I see some more familiar names on here. I won't call you out though since you don't have your cameras on.
And we want you to be comfortable asking us questions. If not in this format, don't be afraid to call Ricky or I. We would rather you call us in January when you have a problem than after we come into audit and it's been going on for 6 or 7 months. It's not unusual for new treasurers and new auditors to call us and say, does this seem right to you? If there's a procedure that you don't understand or doesn't seem right, we'll be more than willing to troubleshoot, to talk about it with both positions and try to get that cleared up. So don't ever hesitate to ask or, but we can more than, be happy to talk to anyone. And there are no stupid questions. They simply do not exist.
Anybody else just wanna? Wish we were in person. I do wish we could all see you in person, and at least have that first introduction. So make sure that you come up to us at our first meeting
I think people
and introduce.
do talk more when we're in person and just it's more informal sitting around, but maybe it's more intimidating being on camera.
That's true too. I don't know. I will say the recordings do show differently than what your screen kind of looks like. I don't know if anybody has went back and looked at them. They are just a tad bit different. So I hope these will be a good resource for you. Again, you can let your staff go back and watch any of it. If you think something would be useful, they're up there. They're free. Anybody can watch them. They're available to anybody. Well, I guess if there's no other questions, we can let you guys go
Back
a
to
little
your
bit
very
early.
busy job.
Yeah, and we've got coming up this week, we have tried to keep all training sessions for the month of January with Tuesday, Wednesdays, and Thursdays, so there should be no Monday or Fridays. We've got for the rest of this week, tomorrow, Treasurer State will be here to talk to the newly elected treasurers at 1 p.m. tomorrow. And then on Thursday, we have a long session with the auditors talking about the Gateway how-to. We're going to go over two different things. We're going to talk about monthly uploads with the auditors and their AFR and 100R. Treasurers will get back to you doing the monthly uploads a little bit later in the month. Okay, and we'll walk you through all of that. So if nobody else has any other questions, we're going to let you guys go for today. We hope that you have a wonderful, wonderful afternoon and that this first week being in office is a breeze.
You'll do fine. You're all going to do wonderful at it. Don't worry about it. And
That's right. It's fine.
If you have questions, you just need to vent, or you have issues, be sure and let us know. Don't be afraid to reach out.
That's right. Okay. Well, thank you all for joining us. And if you have any questions, email us, call us. Other than that, we will see you guys later.